All right. Hey, good morning, everybody. I've got just about 7:30, so we'll go ahead and get started. Thank you for calling in. If you're new and listening for the first time, we're going to be here for 20 minutes, and we're going to cover the latest and greatest of what's happening in the grain markets. Now, if you've been paying attention for the last several weeks, what you've learned is that we're in a weather market, right? We've seen some volatility. We've seen markets go up. We've seen markets come back down. And what we're really doing is just trying to digest all the information, and the trade's trying to figure out what the ending carryout will be. So I've been doing this every day, every week for several weeks, and we're going to do it again because the news flow's not real robust. There's just not a ton of new information hitting us. So if I were going to put it into buckets, here's the buckets I would put news into. You've got yield. We know how many acres we have. We know that we planted 92 million. We know that the USDA says that our yield is going to be 178.5 bushels. The trade is digesting this spectrum. Is it above 180 or is it somewhere lower? And then the other two buckets are exports. How many bushels are we going to sell to China, and how strong is ethanol going to be? That's really the equation. So the end carryout for corn is going to be somewhere in this range right here, somewhere between 3 billion and 1.7. And what's the variables that really impact it the most are, in my opinion, ethanol and yield. Now, the weather, we thought a couple weeks ago we were going to have a weather scare and that we might actually be able to burn up some of the crop and lower it. I think that idea has fled. I don't see any major weather issues. You can read about pockets of dryness uh, in uh, in some of the Corn Belt states, but they don't seem to be real widespread. For the most part, the crop is going to be really good, and I think most of the trade is starting to gravitate towards something above 178.5, closer to the 181, 82 range. And it could even get higher if the temperatures stay cool and wet through the fill period. So the question now becomes all about this number. What is the demand going to be? And when we talk about that, there's a couple of really important things that are happening. On the one hand, you've got the dollar weakening significantly. The last 2 days, the dollar has come off and gold has risen, which that could be an inflationary warning, right? Um, who knows what that will be, but if the dollar is cheaper, then that might encourage China to actually increase how many bushels that they buy from us. And they need to buy a lot. So even if China comes in and buys, as long as the weather holds, this number may not change much. So that's why we're seeing China news come out and the market react bearishly, because it just seems like the market is really on edge about what ethanol is going to do. With you're reading stories now. The New York MetLife Stadium isn't going to allow fans for the NFL season. New Jersey's done it. Other states are doing it. Most of all the NFL teams are either eliminating or limiting in-person attendance. If that trend carries through, that is just a tremendous amount of ethanol that's not going to be used. So I think we have to have China, or this number starts to work even lower than what the USDA says. So the carryout is probably now gravitating closer to this 3 billion than we want it to. To get it down under 2, we've got to kill yield and we've got to beat exports. China's got to come in and buy a ton of corn, and it's got to buy and ethanol plants have to be operating at full steam, or we're just not going to see it. So I think this outcome is very, very low probability. This one is gaining steam all day long. So when we look at the corn market, it's starting to tell us that too, right? So over the last week, we were really, really hopeful that this gap right here that is at 343 3/4 would get filled. So remember, gaps are a big deal. They're telling you that something significant happened in the market, and they fall into one of three categories. They're either breakaway, measuring, or exhaustion. Exhaustion gaps tend to happen at the end of a trend. So if we had gapped down after this move to the downside or this one, if we'd have gapped lower, that could have been an exhaustion gap. I don't see it being an exhaustion gap after this huge consolidation period. I also struggle to call it a measuring gap because that typically happens in mid-trend. So a typical measuring gap, you start this big move to the downside. A typical measuring gap would happen like right here, right in the middle of the trend, and it would gap and go lower. We didn't see that. We have this 60-day period of consolidation and then a gap, and now we've failed to we've failed to close it or even get back inside it. So I think that creates the appearance that it's actually a breakaway gap. And when we broke this 333 level on Monday, that really kind of solidified that. So the bulls really need to come in and defend this level and get that gap closed, or this is going to become an all-out downtrend. It's right on the verge. It's got to take this low out and close, and it's got to go attack this 322 level. And that would be a clear new downtrend, and something more significant is happening. So, and it makes sense, right? If we're gravitating from that 2.7 billion bushel carryout towards 3 or worse, then it would make sense that we're going to go pressure the downside of this range. So the traders are just trying to debate it. That's why we've got this tug of war action going on, and we will know more as the crop gets to maturity. So I'll quit hammering on that for now, and we'll switch to soybeans. All right, soybeans are in a similar boat. As far as beans go, the range of carryouts that beans can have are actually even broader than corn. And so let's take a look at that balance sheet. So here's beans, right? We know what our acreage is. Now we're debating yield, and we're debating somewhat demand. We're really not as worried about domestic demand in beans as we are corn, because we're not quite as tied to biofuels. We're more worried about exports. And China does seem to be buying beans, and they seem to be picking their bean purchasing up. So that's good, but we also need that to happen in order to hit this number from the USDA. But look how sensitive the bean market is to yield fluctuation. So if we just knocked off 2.8 bushels to an acre, it just devastates our carryover. And on the flip side, small increases in yield really expand it. And so with the weather that has turned cool and normal precip through the rest of August, your weather risk is getting less and less. Now, the next 4 weeks are really important for beans, and yes, they can get hurt. But at the moment, it's looking more and more like corn, that we're gravitating this direction and not the other one. So the trade could start to price in a much larger carryout unless China comes in and really picks up buying in a big way. With the rhetoric going back and forth between the two countries, I don't know which side of that camp to fall on. It just seems problematic that China's going to buy enough beans to overwhelm the supply increase that we have from the weather that we're getting. So what is the chart telling us? I think the traders got really optimistic right in here, and so did I. I definitely hoped to see much higher bean prices, but we've failed to break this 912 level, this recent high, and you can see this chart pattern starting to form, right? You've got the big sell-off, you've got the rally, and it started to turn back lower. If this breaks lower and is able to come back and test this 870 level, then that is a downtrend and something that the market will very likely jump all over. So it definitely looks to me like corn that beans need to have bulls step in and get very, very active. Now, again, the dollar is heading lower quickly, so that can change things in a hurry from an export standpoint. And if we get into an inflationary setup, that can create an uplift in commodity prices very, very quickly. So pay attention to what's happening there. But call $9 equilibrium, and the reality is with that carryout from 150 to 800, we could be at 11 and we could be at 7 just as equally. So defend this $9 level with puts and see what happens come the fall. With corn, no harm in defending the 330 level with puts, because that at least takes away the pain of a move to 280. If we move higher, fantastic, right? We can always own our cash and keep our upside open, but just get that downside gone, because it absolutely can move that direction. All right, let's look at Kansas City wheat. Kansas City is almost impossible to trade in this level. It has this downtrend line from this is April 20th is the line that marked this downtrend. We traded both sides of that downtrend for 1, 2, 3, 4, 5, 6, 7 days in a row, and these ranges got to be absolutely huge, almost 20-cent a day ranges in wheat, above and below that downtrend line. That tells you that the wheat market has no idea what it wants to do or where it wants to go. It is in a complete dogfight. But now we've got, well, so there's several fundamentals that are happening, right? You've got the American wheat harvest coming, or the Kansas harvest finished up. You've got the rest of the wheat kind of growing and finishing and looking like it's going to be a decent crop. And then you've got Europe, which is all over the place. You read one day it's dry, the next day it's raining, then it's dry. We don't know what that crop is going to be like. And you have Egypt that keeps buying simply from the Russians and the Ukrainians, and you now have South America that is talking about importing beans from Russia or wheat from Russia. So our wheat market did not like that news very much at all when that broke. But now you've got the dollar that's in a free fall. So wheat is very, very sensitive to the dollar, and the correlation between the dollar movement and Kansas City wheat is very strong. I don't have an exact number, but it's very strong. Kansas City tends to trend the same direction as the dollar is trending. So if the dollar is in an all-out free fall and working lower, that should support wheat at this level, and we could see higher wheat prices, especially if there gets to be any other type of new news. From a technical standpoint, I honestly don't know what to make of this, so we've moved completely to the sideline in it. And I guess the longer term perspective, if you were trading long term, is own it above 430, because there's an awful lot of support here, and until that breaks and they close it below it, then there's no reason to run away from it. You may as well hold it and hope that the dollar weakness turns into wheat strength, especially once this trend line actually breaks and we can close and hold above it. We did that one day here. We broke it, and that looked like we might really rally all the way to $5. but man, the traders just pounded it for 3 days in a row after that. So we'll give it some room and see what it wants to do here. Next year's crop, I wouldn't do anything with it yet. I think there's too much time when we're too close to the bottom of the range to really get active trying to sell it, especially just with the rest of the situation going on. One last thing on wheat. Even though the dollar is coming down, if corn breaks and starts to head lower, I think that's going to pressure wheat too. It's hard for me to think that wheat is going to really rally if corn is going to test $3, but we don't know what's going to happen yet. We just got to kind of roll with it. So in wrap, you've got 330 on your corn market. If we break below that, I think we're in trouble. 322 falls. I think Katie bar the door, we're heading to $3. And I think that could happen really quickly if those levels start to fold. On the flip side, I think it takes a move all the way back above 49 before you can even start to whisper bullish things about the corn market. And beans, 870 is the line in the sand. Below that, beans are in trouble. If we can break 902, then beans have a shot at higher prices. So if you take anything away, buy puts. I think it's the safest bet and the best place to manage your risk. So that is what I have for you today. I hope it was helpful. If you have questions, please give me a ring and we'll talk through it. Have a great day.